Okay, so our last speaker before morning tea is Turi McFarlane, and Turi's the head of rural sustainability in ASB. Turi's been around the block as well, including working for FAR, along with Beef and Lamb and Ravensdown, and he's a Nuffield scholar as well. So he's got a wealth of knowledge and experience of the primary sector. And today he's going to talk about ASB's sustainability-focused customer initiative. So thank you, Turi.
Oh, see what you mean, Rowan. Kia ora everyone, kanuti kia koutou. Alison, Stephen and team at FAR, thank you very much for the opportunity to be here today and share with you hopefully what's a really positive message about some of the work we're involved with regards to rural sustainability in the New Zealand sector. And yeah, it's a pleasure to be here today and thank you for the invite. It's 2 years, I think, since the last maize conference I was involved with, and that was when I was with FAR and the team down in Templeton, and we worked it remotely. So fantastic to be here today. I'll be here for the morning part of the day, but yeah, look forward to what looks like a really interesting couple of sessions and a couple of days of thought-provoking conversation. For those of you who I don't know or haven't met, my name's Turi McFarlane, and I work as Head of Rural Sustainability with ASB, based down in Christchurch. My role at the bank is somewhat unique, certainly in the banking space, being primarily focused on supporting and enabling customers to achieve their sustainability aspirations. So, as Alison mentioned earlier, my background in consulting, RD&E, and working with industry lends itself quite nicely to working closely with customers and our frontline staff in the training space to enable that sustainability space. So, a few notes here to keep me on track, but yeah, in practice, that means working really closely alongside our frontline staff to firstly understand our customers' businesses and farm systems, and then help wherever possible to enable their sustainability aspirations directly through some of the products we're able to offer ourselves, which we'll go and talk to a little bit. But also about connecting and sharing industry links and knowledge, which hopefully is a really useful point for us as well. As you know, I guess a bit of a theme today is that all of us are in this together. Be that Fonterra, the Nestlés of the world, the fertiliser companies, ourselves, farmers, right in the middle of that and central to I guess everyone's ambitions in this space. So. As I said, it's a real pleasure to be here today and look forward to sharing a bit about some of the work we're doing to enable sustainable outcomes with food and fibre producers across the country. One of the questions I get asked a wee bit, and certainly when I came to this role, which I guess is about 1.5 years ago now, is why the move to ASB and why is the bank interested in sustainability? So I think it'd be worth having a bit of a chat about that initially. For me, one of the biggest incentives and something that absolutely still motivates me today, getting increasingly involved in kind of in office stuff, and I was just talking to one of the guys earlier about the opportunity to get out on a couple of days on farm last week. I guess the incentive for me is the opportunity to work and support growers to achieve and enhance their sustainability ambitions beyond the regulatory compliance, the typical compliance of regional compliance, which, so much of the work I've been involved with in different roles has over the years been quite focused and driven around regional regulatory compliance. For better or for worse, absolutely, that's got an important part to play. But for me, the opportunity, I suppose, to link customer aspirations, to financial incentives, be that, the market access opportunities we've heard about earlier, but I guess in the role I'm here with ASB, that access to sustainable finance, is hugely appealing and something that, I jumped at 1.5 years ago, and honestly, it's been really rewarding, encouraging, working with some really inspirational farmers from Southland, from me through to North Waikato, but I know there's been some neat stuff the other team's done up in Northland as well. And getting to work with them and enable them in a space in activities they would like to pursue that align to their values, that align to their business direction, is something that really motivates me. So yeah, working with farmers and growers to improve financial and environmental as well as social outcomes in the world of sustainable finance is something that has been hugely rewarding, and hopefully it's something that we of interest to you all here today. Actually, just as a bit of a shameless plug and hopefully as a reflection of sort of the achievements, I guess, we're working in this space and hopefully the value that we're adding. We're currently actually advertising for another senior manager in the sustainability space as well. So if you do know anyone, it would be great to get some really useful contributions from the cropping sector as well. A lot of the work is dominated by livestock, and particularly the dairy sector, as I suppose we've heard a bit about today. But bit of a passion and something close to my heart is the cropping sector. So hopefully that's a sign of things to come and a recognition of the value and support we need to provide, I guess, to farmers and growers in this space. Let me flick through. Might have skipped a slide. As for the banks drivers, so touched on a bit about myself and some of the interest for me in the area, but as for the banks drivers with respect to enabling rural sustainability, there are a number of drivers behind, a number of aspects behind our genuine motivation to support New Zealand farmers and growers in this space. Firstly, improving sustainability at its core makes good business sense. So we're in the business of supporting and improving strong, resilient businesses for success over the long term. And being a successful business, as I don't need to tell anyone in the room, requires consideration of financial, social and environmental aspects. So at its core, we're keen to support people over the long term. It's not a flash in the pan kind of thing, and to enable that is more than just a financial consideration. There's much more to a business and its success over the long term. The second part, which I guess we're all hearing a little bit more about, but it's recognising our responsibilities as a major contributor to the New Zealand economy and our own compliance obligations as well. So as part of that, and relevant to the discussion today, some of you may have heard, there's a number of bits of legislation out there, but some of you may have heard a bit about the Mandatory Climate Disclosures Act. So might just touch on a little bit of that today. Amongst other things, that requires large financial institutions, the likes of ourselves at ASB, to describe our Scope 1 and 2 emissions, so our direct emissions, which is relatively tangible and something we've got a reasonable grasp of, as well as our Scope 3 financed emissions. So heard a bit more earlier about Nestlé's Scope 3 emissions, about their suppliers. For us, our Scope 3 emissions relate to our financed emissions or our customers, which, as you can imagine, for someone like Fonterra, that's a challenge in itself, but at least that's dairy. For ASB, we finance into across the rural sector. So there's a lot to understand there, and I suppose a key focus for us at the moment is understanding that as part of our reporting towards mandatory disclosures. On the screen there is our most recent climate report, and it's also our sustainability report, and both of which are available online if you are interested. But essentially they describe the process and efforts that we're engaged in to better understand both our direct and financed emissions, as well as a range of other aspects, including efforts to better understand both physical and transitional risk as that relates to climate change and our customers going into the future. So our last two climate reports have been voluntary disclosures that we've been working towards building the capability and capacity to actually submit our first mandatory disclosure, which will be this year in FY24. So the coming financial year will be when you see the first mandatory disclosure for those financial institutions. So quite a lot of effort and resource being put into that at the moment. as I mentioned earlier, one of the key aspects of my role and something that really drives me and sort of, I guess, gets the passion inside me going to support our farmers and growers is working closely alongside our frontline staff, which includes rural managers, rural corporate managers for our larger customers, to support and enable customer-driven sustainability initiatives. In that respect, we've got a number of products which have been specifically designed to enable customers in the area of sustainability, and 3 of them I'd just like to touch a bit on today, and hopefully it's a useful conversation for those of you that may be interested in that space, or for those of you aren't, a bit of an understanding about actually what is available in that space, which is rapidly evolving to support our customers' needs. So the Business Sustainability Loan, which is a use of funds product-specific loan, and then the Sustainability Linked Loan and the Sustainability Transition Loan, which really are a general use of funds loan supporting farmers and growers aligned to them setting a strategy and KPIs and targets and the achievement or otherwise of them. So the Business Sustainability Loan, if I jump to the next slide. The Business Sustainability Loan builds on the Rural Sustainability Loan, which actually got a lot of traction in the Waikato, and I'm sure some of you in the room will be familiar with that. Essentially, it's a product. Essentially, the product is about simply providing discounted lending to customers taking positive steps to enable environmental and social outcome, improvement in environmental and social outcomes. So it's very, as I mentioned earlier, it's a use of proceeds loan, which means lending is linked to a specific project activity, and it's not driven or bound by external regulation, but focused on customer aspirations. So essentially, if there are projects that you can demonstrate that you'd like to invest in over the next period, and you can demonstrate an improvement in either environmental or social outcomes, this is the product that's targeted towards that delivery. So some of the key areas which the BSL seeks to support, there's a number in there that are included, but wetland, riparian and other planting, flood protection activities, so thinking about that climate adaptation piece, as well as water harvesting and storage. Efforts around soil erosion control, nutrient monitoring technology, livestock monitoring systems and infrastructure, irrigation infrastructure, stock exclusion from waterways, and there's various effluent infrastructure projects that have been considered as part of the RSL and can be considered as the BSL now. So a really neat product, something that really is there and tailored and available to farmers and growers to support their aspirations around project-specific activities. The next piece to think about here, and it's probably something I imagine quite a few of you in the room have probably heard a bit about, is the Sustainability Linked Loan. So an internationally recognised product, the Sustainability Linked Loan, and something I'm sure a number of you are familiar with. It's not the typically a use of proceeds loan, but rather, as I mentioned earlier, a general use for general corporate purposes. So in essence, the SLL, Sustainability Linked Loan, seeks to facilitate and support environmentally and socially sustainable economic growth by incentivising a borrower through achievement of KPIs and sustainability performance targets, or SPTs. We've started to see a really interesting range of ambitious KPIs and SPTs being developed across the rural sector. Some of them include greenhouse gas emissions targets, both as absolute and intensity metrics. In some areas where catchments are over-allocated for nitrogen, we've seen targets based around modelled nitrogen leaching losses. And we've also seen biodiversity targets have actually been quite a consistent one across regions, as well as animal welfare targets. So to be fair, the majority of ones we've had in the space have had livestock as part of the farm system, and animal welfare targets such as could be a body condition score target or metric, so a percentage above or below of that, and working that through over the period of the loan. People wellbeing, so people wellbeing is another really important one, and something where people have considered opportunities around development plans for X percentage of senior managers, or some have also included diversity targets as part of that as well. So critical to success of the Sustainable Linked Loan is two key parts. So it's a materiality assessment and then the level of ambition. So the materiality assessment really is about making sure that the KPIs that you work towards are relevant and meaningful for that business. So a really important step that gets externally verified outside of us as the bank, that ensures that whatever those 5 KPIs that an outfit lands on are actually material and then meaningful for their business. So that step typically requires a reasonable amount of resourcing to get the perspectives of both the internal workplace, so typically that this will be targeted at a reasonably large business, understand what are the key drivers that they see internally, but almost as importantly, what is important externally. So that might be working in with industry, working in with vets, trying to understand from a regional council perspective, what are those key drivers, milk supply companies, what are the key drivers that they see for your business now and into the future. So being able to justify those KPIs from a materiality perspective and present that to the third party at the assurance audit. The second bit, which can take the most, is demonstrating the level of ambition. So the intent behind a sustainability linked loan isn't to reward BAU, but it's to incentivise the outfits to be able to pursue an ambitious target beyond your business as usual. So in that respect, it's thinking about things like benchmarking, so considering your recent performance, considering industry benchmarks, looking at science-based targets and where that may direct you over time is some of the things that people may use to demonstrate that. Finally, and a product I actually think's really neat, it's targeted at people that aren't at the position of being able to take up a sustainability linked loan, which, to be honest, is quite an advanced state. You have a sustainability strategy, you understand your metrics and targets, you've got that materiality assessment completed, and you sort of know where you're working. The transition loan is a really neat product that essentially supports customers through discounted interest rates over the first period of 12 months to develop that strategy. So it supports you to consider what's important and supports you to explore what is ambitious, how can we resource that over a period of 12 months, and then work towards setting those KPIs and targets. So, as just in summary, wrapping up here, look, I hope that's been useful as a brief overview of what we're doing and what we're involved with in this rapidly evolving space of sustainable finance. I'll be around this morning and would love to have a chat with any of you that would like to know more. Equally, very happy to take questions now as well. So yeah, thank you for your time.
Okay, so questions for Turi? Down here.
Discussion recently around discussions recently around the availability of finance, or a criteria for availability for finance coming into that sustainability area, i.e. if you're not meeting requirements, then banks are going to ask questions about whether they're going to finance you. Is that something you can comment on?
Yeah, look, really good point, and it's something I guess people are thinking about. What I would say to that is your sustainability profile is considered in its broader sense and has been considered, right? So your performance or otherwise with regards to animal welfare or compliance against your regional resource consents, and the bigger picture around how your emissions are considered, is and will be considered, and that will continue to be developed. What I would say is that that's not really anything that's looked into isolation, and it's not anything that's particularly unique at this point in time. So, if you had a major issue around animal welfare in the past, that would, be considered as part of, a risk assessment of a business, as would your, financial performance and position as well. So, absolutely, those things are considered as part of a bigger picture and have been considered part of a bigger picture. And you'll notice, some more detailed questions around things like your emissions profile as we now, I guess, have an ability to actually calculate on-farm emissions, and those tools are becoming more available as we try and understand, our finance Scope 3 emissions targets, our Scope 3 financed emissions and, what that looks like. So, yeah, hopefully that answers your question.
Okay, Andy? Oh, okay, down here first.
Yeah, thanks, Turi. It was good. It's good to know what's going on in that space and what's being offered by ASB. Just a question, and I think you have answered it anyway. When you're giving that loan to the customer based on the sustainability targets that they need to achieve, you mentioned that they need to have a strategy around greenhouse gas emission reducing and all those kind of things. Is there any expectation for the end user to provide you with a report or something? Is it something that they need to give you after a year, 2 years?
Sorry, was an audit, is that what you said?
Yeah.
Yeah, absolutely. So a really important part of actually all those products. So if I think about the business sustainability loan, so the project-specific activities, basically that requires upfront with your application some sort of support that shows what the improvement is you're seeking to make, so be that an environmental outcome you're trying to achieve, and on the back of that it's a use of proceeds to support that application. As part of the sustainability linked loan, there is a very robust process that's audited by a third party to ensure that you have achieved otherwise, what those KPIs and SPTs were. So there's a real concern about not verifying that properly, so there is actually quite a bit of process around demonstrating that.
Thank you.
Hi Turi. Just a question. You mentioned that these loans are being across the primary industries, across sectors. I was just interested whether, as this develops, whether you're seeing people who are coming to you associated with assurance schemes, and whether they've got other incentives to be doing this, or whether it's primarily for the loan discount.
Yeah, good question, Andy. So none of our products are linked directly to an assurance scheme or linked directly to a regional council expectation. So they are set there to reward and incentivise ambition from a farmer, regardless of what's been set in regional regulation. Hopefully that aligns really closely with farm assurance programs, and I know that there is some work that others are doing that is very closely aligned to farm assurance schemes and the achievement otherwise with that. Our products sit outside that, and actually, to be honest, quite deliberately, in the sense that we don't want to be confined or defined by, regulation, regional regulation, but incentivise that achievement outside of it.
I just wondered if the people that were coming to you initially are those that have reasons around those assurance schemes.
No, I wouldn't say that, Andy. No, in general, the people that have come to us are ones that, particularly around the bigger products, so the linked loan, is ones that actually really want to be leaders in that space and want to demonstrate that level of ambition, and for other reasons, be it market access or whatever, are really keen to showcase their performance and push themselves and deliver that for their farmers. With regards to the project-specific stuff, it's actually more people looking at an opportunity, may that be an irrigation efficiency upgrade, it might be actually solar on a farm. So it's not necessarily linked to a farm assurance scheme.
Okay, if there's no other questions, can we just thank Turi again? Thank you. And we should point out we weren't necessarily promoting specifically ASB financial loans. We were just illustrating the whole issue now around the banks having a responsibility now to be able to report on emissions, including their Scope 3 emissions, which is their customers. So you can just see how this is going to become embedded in everything that you have to do as a farmer.